Mark, all roads seem to lead to weak technology risk appetite this morning. We've got ASML giving us negative headlines around bookings and unable to quantify the impact of tariffs. We've got Nvidia talking about a write-down in its value, and Nasdaq futures off 1.9% at this moment as a result. This is taking the tariff story and the decoupling US-China story on another step, I suppose.
Absolutely, and I think you've cited the kind of main reasons there. The China-US trade war is back at the forefront. Nvidia negativity, ASML negativity, but we've got to remember that these moves are quite small compared to what we've seen most days this month. So this is not too dramatic. The backdrop here remains very negative, and we're expecting more losses for US stocks in the months ahead. I think what we're really set up for is I do think the trade talks between Best and Japan are very important today. They're very important globally, not just a Japan story, though they're very much a Japan story as well, because Japan is one of the countries with one of the largest trade surpluses with US. It's a major trade partner. It's been perceived as a very strong ally previous to this administration. So how will those negotiations go? I think there'll be a strong read across from how they go. If it seems like there's a perception that negotiations go relatively easily, Japan could strike a deal with mild concessions perhaps, or at least that's the sounds that come out of the meetings, well then people will be very optimistic that, hey, these threats from the Trump administration are mainly threats, they're mainly negotiations, and it's easy to move beyond them. However, if it looks like the US administration is going to play hardball in negotiations, that'll be very worrying to people, given that Japan has been such a staunch ally. If they're going to treat Japan harshly, what's going to happen to other nations out there? So I think that's the real big risk, and part of the negativity we're seeing in stocks at the moment is people want to lower their risk going into the long weekend in the US.
Sure. How symmetrical is that risk? If Japan looks like it can get a deal, what kind of a bounce do we get in terms of risk assets? If it doesn't, what does the opposite look like? And again, what is the symmetry between those two?
Great question. I think short term, the asymmetric risk is actually for relief. I think this is a market that is very nervous. And I think that they'll trade a positive story much more aggressively because people have got out of the market recently, at least short-term players. So I think short-term, the asymmetric risk is higher. I actually think that longer-term, people won't, trade as a longer-term story. I think the longer-term negativity will be there even if there's relief in the short-term, which means if there's a negative story today, that'll be really, really drastic in the longer-term because people already want to be long-term bearish. So short-term, asymmetric risk higher, long-term, asymmetric risk lower.
Mark, very quickly, is the dollar a risk asset now?
Great question, Kriti. I was worried you're going to ask me this. I think the dollar bounces after the Japan-US talks because there won't be a currency deal. That's separate from the success of the talks overall, which means dollar-yen will bounce and raise the Bloomberg Dollar Index. Is that good or bad for stocks? I'm not really sure. I think stocks are moving dollar rather than dollar driving stocks or risk sentiment.